Thanks for checking out ChartGuys.com, the definitive home for technical analysis online. Our passion is understanding the market and identifying trade opportunities. Our goal is to share our success with others through consultation, training videos, and educational course materials. Get the skills that will make you a more confident, effective, and informed trader. Join us today for access to daily analysis and live market coverage, a thriving community of over 1,000 active members, and hours of exclusive educational content. Come for the education, stay for the community.
Hey everyone, checking in on the MJ space. So a lot of weakness out there, a lot of pullbacks, and not exactly the bounce that I wanted to see. I'll describe why in just a minute. But with all the bear breaks, we're going to be looking on some of the longer term time frames for the broader setups, as we are now seeing notable weakness in Canada and the US sectors, second day in a row. So remember back weeks or months ago where we were looking and noticing, okay, US MJ names are holding up way better than Canadian MJ, and it was the second day in a row when that happened that told us, okay, this is now something we need to be keeping an eye on. This is now the second day that this has happened. SPY just started to barely pull back yesterday. Today we got a little bit more follow through, down 0.5%, but a lot of weakness on both the Canadian and US MJ side of things. So when I like to see an oversold bounce, I want to see things get extreme. I want an all-out flush. I want V-shaped recoveries. So I want to see notable gap down opens. We only saw a gap down open in Cron and VFF. CGC saw a gap down open by 2 pennies. I want to see it gap down by 2%. The more extreme to the downside, the better the bounce. And that's why Cron and VFF had great bounces to start the day, as they had the weakest opens and the biggest gap down opens. So just for comparison, if we're looking at 2 pullbacks, let's look at Cron on the hourly. So this was yesterday with the all-out dump. That's what I want to see. That's extreme. And ended up with a very weak little hourly bounce attempt with the gap down open and big time dip buying. But that's the kind of action that I want to see. And we're seeing names do what CWeb is doing. And this is not what I want to see. These are not the bounces. We're pulling back, but every time we get this little bounce, it cools off RSI levels significantly. And visually, I imagine it, if we're looking at bulls and bears battling each other, this is the bears allowing themselves to take a breather. They're able to take a step away from the battle and take a breather, reestablish themselves, push the price to lower lows, do it again, as opposed to exhausting themselves to the downside. So here they are using up all their energy, exhausting themselves. That's when we get the bounce. That's what I want to see. So it's also notable that in the past when we played some really nice sector bounces, things got real ugly in the sense that we could have, an 8%, 10% red day on some of these major names. So while it is a lot of red out there, it's still only 4-5%, and it's not as significant as we've seen in the past. So just be aware that it can get more significant. Also noting that we're breaking correlation between individual names. Back when we were playing the other bounces in the Canadian MJ sector just, 6 months ago, we were looking at everybody doing the same thing and having very similar setups with slight variations on how the bounces played out. But it was the kind of thing where we look for the sector to bounce together. And today we had a very clear distinction that that's not happening right now. So we saw VFF and Cron bounce first thing. We saw CGC take its time to find the low of the day, and it faded, hit that low of the day in hourly RSI down in the low 20s, and then it bounced in the middle of the day. And we saw names like TLRY, which bounced really strong to start the day, gave the entire bounce back, and then saw significant bounce follow through. And then the USMJ names are all doing their own thing as well. So what I want to highlight is that the correlations between individual names in this sector are breaking, and that does provide more opportunity where we can play. I mean, if someone were really nimble and had a great trading day today, they would have played either Cron or VFF in the first 20 minutes for that bounce, and then they would have played the CGC bounce because it was a laggard, or the TLRY second leg up, which was a laggard as well. So it gives more opportunity, whereas if everybody's correlated and the bounce gets going, you choose your horse and that's it. You see the bounce play out, and you're going to miss the opportunity of other names because it's all happening at the same time. So that stood out to me. We're going to keep an eye on it all, and let's get into regular analysis. So CGC gap down open by 2% or 2 pennies again. I want to see 2% if I'm going to be looking to aggressively buy that gap down open. So I sat on my hands this morning. I said, okay, I'm waiting for trades to come to me. If I'm going to be a patient trader, this is not what I want. This is not my ideal setup. I'm not going to force trades here. And yes, I did miss the opportunity in VFF and Cron first thing, but it wasn't the ideal setup, and it wasn't the kind of scenario where I'm going to be aggressive and confident because things were a little bit different. And again, it's the fact that everybody was doing their own thing to a certain degree that caught me a little bit off guard as well. So on the 5-minute time frame for CGC, we did see a very nice bounce from the lows. Breaking the 5-minute lower highs did it. So there's our bounce to start the morning. New low of the day, lower high on declining bull volume, lower low. And then we had some stops trigger here. You can see the bulls built the base of support in the 4120s, hit those stops, and then the bounce takes place, breaking the 5-minute lower high for the first time today at 4154. And then the bulls didn't look back after a nice solid move. But it's all about the hourly time frames. So for any individual name, if we're going to see a daily bounce get followed through, we have to change the hourly trend. So for CGC, we have our low of the day and the high of the bounce. Those are our most important two levels going into tomorrow. And if the bulls can form a higher low and break 4218, we have an hourly trend change. The bounce gets followed through, and then we zoom out to the daily chart and say, all right, anything under 4417 is just a lower high. Let's see what the bulls can do with it. But step number one is changing that hourly trend, because if you don't change that hourly trend, the bulls don't prove anything except that they've cooled off RSI levels that could be opening up the door for another leg down. So CGC is making its way towards 4056. And again, if that level breaks, the odds of a monthly equilibrium increase significantly, and we then shift our focus to the upper to mid $30 range to be watching for the monthly higher low to form. So the bulls want to hold that level and change this daily trend, but obviously the bears had the momentum in their favor in the short term as we came fairly close to that level at the low of today. So we're watching that hourly trend. Can the bulls get follow through into tomorrow? S&P 500 closed fairly weak down at the low of the day. Cron did see a sizable gap down open. 1748 was the low, and not even sizable, but it was a percent, which the bulls will take. And the hourly RSI was already one of the more extreme names. And the 4-hour RSI touched right on oversold at the low of the day. But the bottom line is the bulls bought the dip very aggressively from the open. On that gap down open on the 5-minute time frame, in 15 minutes the play was over. So 15 minutes, we see the bulls take the price 3 to 4%, less than 4, 3.5, and then that's it. There's your opportunity. So we had the high, low, lower high, higher low, bull break with no follow through, and the lack of bull volume on that break attempt was a red flag. And then as soon as we come down and break 1765 on increasing bear volume, significant red flags from that point on. But it's the same thing. Hourly time frame. Can we change the trend? And we have an equilibrium. Low of the day, high of the day, higher low, lower high of 1785, and the bulls are trying to form a higher low here compared to 1748. This is happening after hours on no volume, so I'm not going to put a whole lot of weight into that. Bulls want to hold 1748 first thing tomorrow and break 1785 to change the hourly trend and look for this bounce to get followed through. Same thing, we zoom out to the daily. Anything under 1876 is just a daily lower high. At this point, these bounces are just cooling off RSI levels. We're not changing any trends. Cron and CGC are clearly in daily downtrends, and that's not going to change in the immediate near term unless there's some kind of news catalyst, but it's going to take multiple days to try and establish a trend change. APHA with a bear break, so we have a lower high and lower low on the daily now. High of the bull move, low of consolidation, kept the bulls in control. We topped out, unable to break resistance by 3 pennies, and here we are dropping to a lower low under 963. So we still have earnings to be watching next week, and while we're on the topic of earnings, GTII just reported. We'll get to them in a minute. We've got TRUL on Thursday, and we've got KSHB this week as well. So some US MJ names, some of the major players having their earnings come out this week, certainly worth being aware of. But on APH now, we just have a weekly tightening range now that we lost that daily higher low. And it's still tightening up from the range that we've been within. Look at this 2-week range from 1095 to 808. And we have now been within this range for 2.5 months. So these are the most important levels for me. But you can see we're tightening up a bit. We were rejected from resistance, bounce off support, and patiently waiting for a break of that range for the longer term perspective. This is one of the more sideways weekly charts that you're going to see. ACB, the inverse head and shoulders potential is negated. We had the 4-hour equilibrium that we were watching from yesterday as it was more clear. Double top at 930 and a break of 882 was the bear break. So now we're looking down at 838 as the next support level, and the bulls are losing momentum and heading down to test the low of this weekly consolidation. So we never gave the indication that our weekly higher low was established. We never changed the daily trend, and never got significant bounce follow through. So we may need to continue pulling back, but we do have 838 as the clear support level nearby that the bulls want to maintain. TLRY. So I've been day trading TLRY a little bit the last 2 days on these bounces and looking for a more meaningful bounce to play out, but want to have some more confidence. We had our low of the day, so let's look at how tricky it was here on TLRY. Huge start to the morning, gave it all back and hit a new low of the day by 9 cents, and then just like that, straight to a high of the day with some big bull volume and follow through, and then faded. But it was key and clear, or I should say it was clear, to look for consolidation, just because when you look at this hourly time frame and you're coming from that significant of a dump, if you're coming straight off the low, you know an hourly higher low needs to form to look for a trend change. Yes, it's a nice bounce, and yes, we can break hourly lower highs, but unless we get the higher low and higher high follow through, we don't confirm any trend change. And that was in combination with a big ask of 40,000 shares that showed up at 57.79 right at the top, and that marked the top. That was a wall of shares where the biggest wall that we were seeing prior to that was maybe 10,000 shares, and most of the time we wouldn't even see orders that size. So when you see an order 4 times the size of the biggest orders that you're seeing sitting on the ask, and you have run that much, looking at the 15-minute time frame, we were extended heading up and hitting that big wall of resistance, lower high, lower low, and there's your hourly consolidation underway. So the bulls have to hold 55.18 to form a higher low and break 57.79 to get this bounce having any follow through on the daily time frame. And at this point, we've cooled off RSI levels, so we do have to be cautious for the potential of another leg down. Hourly RSI is no longer oversold. 4-hour RSI is still weak, down in the low 20s, and the daily RSI is still weak, down in the low 20s, but we have to see these hourly trend changes for follow through. OGI, anything above 864 was a higher low, and we dumped. So this was a bounce. That's the dump we want to see. That is an all-out flush, and we saw the bulls buy, and the ended up with the bounce being a solid 5% move off the low of the day, but it's the same hourly trend change that we're watching for. Can we form the low, high? We're looking for a higher low, a bit more convincing because of the volume behind it. This happened during regular trading, whereas for Cron, that hourly higher low attempt is on no volume in extended hours. So just want to note that little difference between the two. But 909 to 936 is the clear range. And if we break the hourly trend, change it, then our daily higher low has clearly been established. At this point, if that hourly trend changes for the bulls, the size of the pullback is such that we would anticipate a lower high compared to 1003. If we pulled back to 950, continuation is absolutely possible. But when you pull back that significantly, over 11% from the high of the day, or from the high of the chart, the high of the bull move, you can anticipate that it's likely going to be a lower high that forms from there. And we have to be cautious of the head and shoulders pattern, which would indicate a change in the daily trend. So that's all a head and shoulders pattern is. It just simplifies visually a change in trend. We have higher lows and higher highs. Higher low is maintained, lower high, lower low. That's the right shoulder and then breaking the neckline if that were to play out. And just to draw it visually, it would look like that. So it's going from higher lows and higher highs to a lower high and lower low. And if this is the bounce, that's great, but that is something that we need to be aware of for the longer term pattern. Hexo with the bear break from the 4-hour tightening equilibrium. Not surprising, it's actually a daily equilibrium. Not surprising as yesterday's action told us that a bear break was more likely, specifically with the week close down at the low, and we saw the bear break of 862, and we also broke support of 835, just barely, but 2 support levels did break, and there's the uptick in bear volume. So we're now looking at 815 as that low, and Hexo on the weekly chart, now weekly consolidation is clearly underway. So anything on the weekly above 685 is a higher low, but we topped out, the bulls lost their momentum, and weekly consolidation is needed. So again, when we see a change in trend on a certain time frame, we zoom out and look at the longer term perspective, which we're going to do on all the names that broke their supports. TRST, we're watching for the daily bear flag possibility. As soon as we broke the low of yesterday, the odds of that bear flag increased. It hasn't officially confirmed yet, but we're heading back down to that level. The only chance for the bulls is to hold 965 and break 1041 to change the daily trend. If we break 965, 932 is the next support level, and it's just a clear daily downtrend at this point. The bulls have not done anything for the last 2.5 weeks ever since we had that gap down open. VFF. So daily equilibrium is playing out as we anticipated. We are just patiently waiting for a break in the higher low every day pattern to indicate that our daily lower high was set. And we got that yesterday and closed at the low of the day. We got followed through today for the bears. And we closed fairly weak. Again, this is a weak bounce at the end of the day. 15-minute potential little bear flag. But the bounce this morning was very solid yet again. This bounce from the quick gap down, open, and flush to the high of the day was over 6%. So that's one of the bounce leaders. And then they gave it all right back. So I'm still interested in VFF. I'd love a gap down open, but we did close a little bit above the low of the day. I want to see a flush into the, let's see, the $17 range to play off of this 1676 support, to be looking for that daily higher low to form, and then for looking for a bounce and anticipate a lower high to be set right around the $20 range. So that's what we're keeping an eye out for. VFF is on top watch tomorrow to see if this support level can hold, because again, it is one of the weakest closes today, where other names have those hourly possibilities for those tightening ranges. VFF doesn't even have that. The hourly time frame clearly dropped to lower lows with no tightening range. And we're close to oversold on the hourly. So if we break the low of today, tomorrow, and flush down, we'll be an hourly oversold pretty quickly. CVSI had a bear break. So I was playing off of the support of 550. And we did have a nice solid little bounce there again today. A 2% bounce off of that low of 550. And I ended up selling for a tiny loss. But I sold into support. And the reason I sell into support there rather than waiting for support to break, you might say, well, if 550 is support and we bounced off 550 and 553 and then 551 earlier in the day, why in the world are you going to sell at 551 and not give support another chance to hold? Number one, this wasn't the reason, but descending triangles are generally bearish patterns, and that's what we had. But the reason was knowing how clear support is. When you have a support level that has multiple touches, it instantly becomes more clear to the entire trading environment, whether it's bots or humans or whoever. If it's a clear level, more people are going to act on it. If it's a clear resistance and it breaks, more shorts are going to cover, more bulls are going to buy that break. If it's a clear support level that breaks, more bulls are going to bail, more shorts are going to jump in. So when you have a support level that is held 3 times, I want to sell before everybody's stops get triggered, because as soon as we break that 550 level, we dumped from 550 and then 15 minutes later, we're down 4% more. So I sold at 551 anticipating a bear break would occur. And if I had waited, I would then be competing with everybody, racing to the exit, trying to market sell as bids are getting swallowed up and evaporated from all that selling pressure. So by selling at 551, if I had waited for the break and then market sold, I probably would have gotten filled in the 542, 543 range. That's just a guess. But judging by how quickly we pulled back, it would have been a fill in the low 540s. So that saved me a solid 1% on the trade by exiting a little bit early. So on the daily, we have the bear break now with a lower high and lower low. So we zoom out to the longer term perspective, and we still have a weekly uptrend. So we're just looking for a weekly higher low compared to 433. There's no major red flags in this sector unless we lose weekly uptrends. And the Cron and CGC weekly charts right now are a little bit ambiguous. So that's why I'm a little bit more timid on those names. But US MJ names and some of these Canadian MJ names like VFF, as long as the weekly uptrends are intact, that's just fine for the bulls. It's when you lose those weekly uptrends that is a big red flag. And that's the kind of scenario where we could enter prolonged pullbacks for multiple months. If you're keeping the weekly uptrend, you're not going to pull back for multiple months, because it's not possible to pull back for multiple months when you're keeping the weekly uptrend. So for CVSI, we'll look for a weekly higher low to form compared to 435. RSI levels are pretty beat up. We did see a little bounce right at the end of the day, but if we keep seeing weakness, if we break the low of today, tomorrow, then we are going to look for an hourly oversold bounce. Anything under 598 is just a daily lower high, very clear lower highs every time we bounce with a lack of follow through. IAN, all out high bear volume dump, big red flag. This is as soon as we broke that 699 low, we were looking for a 4-hour equilibrium for a higher low to form compared to 699. As soon as that broke, the bear volume poured in. That was the lowest price that we've seen, and we're close to 4-hour oversold RSI. The hourly RSI is beat up. So this is one of the more oversold names, specifically in the US space. We do still have a weekly uptrend, but that's in jeopardy. If we lose 651, the weekly uptrend is lost and I will exit my long-term position. So my long-term positions are going to be established around weekly trends. And if we do not have a weekly uptrend, I'm not going to be in a long-term position. So I've been holding this bad boy for 4 or 5 months at this point from the MPX conversion, but I will have no problem cutting it loose if we do break that support. That being said, if we were to break that support tomorrow, I would wait for an oversold bounce and then sell, knowing that the hourly and the 4-hour RSI were so beat up already. So that's a scenario where rather than stop out at 651, I would wait and then stop out on the lower high for the oversold bounce that would be coming probably shortly after, considering what the RSI levels are currently at. So IAN is definitely giving some red flags. But that caused me to zoom out to the monthly chart for IAN and say, oh, well, that's a crystal clear equilibrium. That makes a lot of sense. All-time high, low of consolidation, lower high at 820. And if we break 651, we're looking for a monthly higher low to form, just like CGC. Let's overlay. Haven't done this yet, but just out of curiosity, what does CGC look like here? Look at that correlation. IAN and CGC, all-time highs, hitting the same months. Low of the consolidation, hitting the same month. Lower highs, maybe a month. Nope, hitting the same month. And now we're consolidating. I did not expect it to be that correlated, but it is significant. So, monthly equilibrium, just like it's on watch for CGC, it's on watch for IAN as well. So what I'm going to start doing now this weekend is make a list in terms of what is the most clear setup, or what time frame is the most clear setup. So if I have a list and I have IAN monthly chart, that's going to tell me the first thing that I should be doing when I'm looking at IAN is look at the monthly chart first. And that's going to potentially allow us to establish entries. I absolutely plan on entering CGC long term. If we fade this summer and get that monthly equilibrium, I'm going to scout that monthly high or low. And I'm going to try and enter in the mid 30s or upper 30s, wherever that monthly high or low does form, because I am bullish on the sector as a whole. If the S&P 500 were to tank out of nowhere, that would change things. But as long as the S&P 500 holds up just fine and keeps a weekly uptrend without any major red flags, I would expect the monthly equilibriums in these sectors to break bullish at the end of the year or in 2020. So if that's what my expectations are, that means my best entry opportunity is for the monthly higher lows. And if I can get in near the monthly higher lows and then ride out the tightening pattern and wait for the bull break on long-term positions, that's going to be your best entry opportunity in these current setups. I'm going all off the rails here from my planned talk, although I guess it's always freestyle. CURA, key daily support is 1107. We're dumping down towards it. We had that hourly bounce yesterday. Actually, that was CWeb I was thinking of, so forget that. On Cura, we saw the hourly bounce today from oversold conditions, fairly weak bounce. What stands out is there is no bull volume behind this bounce, even though it was a nice 4% little bounce. Look at the bull volume. It's just not there at all. So we dropped down and hit a new low right at the end of the day, only by a penny, but this is a name similar to VFF, where if we flush down towards daily support of 1107, we're going to be watching for another hourly oversold bounce opportunity and for the bulls to attempt to hold the daily uptrend. So Cura and VFF are on top watch for me, as is TLRY, because I want to see if that hourly shift can occur on the trend change. But after 4 days of consolidation, and at this point from that all-time high, we've given back 18, 19%. We're going to be looking to see if 1107 support can hold. So CWeb already showed how this is not the extreme dump. The RSI is slowly approaching oversold. The daily chart clearly pulling back. We're still looking for the higher low compared to 2472, and we close at the low of the day. But his RSI level is not going to be as beat up as other names because of this stair-step action. So it's worth watching. If you're interested in CWeb fundamentally, this is definitely, again, a much better opportunity for entry on consolidation versus into the breakout, because there are people that bought into this breakout late and they're already red 5-10% in their position as opposed to entering on consolidation and having better risk to reward of being in the green in the short term if you're entering on an uptrend, which we still are in for CWeb. Again, the fact that we pulled back this much from these all-time highs, we shouldn't expect just to turn right around and head to all-time highs. We have pulled back significantly, so we will look for lower highs to form when we do bounce on the daily charts. Just want to keep that perspective. TLRY is holding up very well. We did have news yesterday, which helped hold up against the bear onslaught. And today we pulled back. It's a 4-hour equilibrium. That was the most likely scenario because of the size of the pullback from that high. But overall, on the daily time frame, no red flags, and it's not nearly as beat up as these other names. We will lose the daily uptrend if we break 1869, but we would just zoom out to the weekly chart and look for a weekly high or low compared to 1497. Bulls have a lot of space to work with to maintain the weekly uptrend at this point. So there are names where even if the daily uptrend breaks, it's not a major red flag for the longer term patterns, which is why you want to have game plans established before you ever enter the trade. Because it's very easy to convince yourself, well, I'll just hold after the daily bear break because the weekly chart's still in an uptrend. And if you're doing that when that wasn't your original game plan, that's when your losses are going to get bigger than you planned. Whereas if you're saying, I'm entering this trade based on the weekly uptrend, you already know your maximum risk for that trade. So with me and IAN, that has been the game plan for the long position from day one. So I know what level would lose the weekly uptrend, and I know what the lowest price, lowest value that my shares will be worth when I sell will be if I do trigger out on that bear break. So we'll see the 4-hour tightening pattern on TRRUL. Probably will break Thursday, but could possibly break tomorrow. GTII just reported earnings, and they had 20 million the last quarter, which keeps them in line with where they were, about 5th on the USMJ list for quarterly revenue size. But they do have pro forma revenue of about 44 million in the quarter if you factor in companies that they've bought out and, you know, the company that they're shaping up to be. So next time around, they're going to jump up the list a big amount. 44 million a quarter would put them up at the top of the USMJ MSO list, multi-state operators. So I expect a bullish reaction, although Fidelity did just put out a headline, and their headline highlighted the 3 times bigger loss. Didn't really, the revenue was a footnote, and it was definitely a bearish spin on how they wrote that title. So we have the daily high or low still intact compared to 1825. Another little nugget of knowledge. When you see the price, I do this play in the big stock market world, Apple, Tesla. When you see the price run for a couple days heading into earnings, you anticipate that people are going to take profit. So if Tesla runs 5% over 3 days into earnings, anybody that's been holding for 3 days is up 5%. Are they going to look to hold that position and gamble on earnings? Or are they going to lock in some of that profit and not gamble on earnings? So I look for plays the day before earnings in the opposite direction of where the momentum has been going if it's been significant. So for GTII, it was a significant pullback over the last few days, and we ended up on the bounce going about 6%, putting it in line with one of the best bounces today. And that's because you anticipate if shorts are making money, 2 things. Psychologically, shorts are making money. They don't know what earnings are going to be. They're going to lock in some profit before earnings. That's going to lead to a bounce. And likewise, people are going to view this as a discount. Wow, I can get in, 15% cheaper than the price was just 3 days ago heading into earnings. I'm going to buy this dip. So that's the psychology that looks for a move, a short-term move in the opposing direction of where momentum has been heading into earnings. So if we're looking at a 3-day bull move, we look for bulls to take some profit and some shorts to jump in and knock the price down, and likewise in the other direction. So the question is, how are we going to respond to earnings? If it's a bullish reaction, our daily high or low is established. 2043 and 2180 will be the first 2 resistance levels, and not going to sit too much here and speculate. We'll see what the price is tomorrow. OH, daily high or low, test is coming. No red flags in terms of volume. Hourly RSI, we did have a bounce. It cooled off RSI. It was a bear flag with no bull volume behind it. If 1131 breaks tomorrow, we're looking at 1105 as the next support level. Hourly RSI will be getting back to oversold if we break the low of today tomorrow. And it's all about that support level. If it breaks, we're looking at weekly consolidation underway, easily in an uptrend on the weekly chart of 857. CL, same thing, week close. Anything above 1409 is a higher low. Hourly RSI saw a very weak bounce attempt with no follow through. Cools off the RSI insignificantly. And if we break 1472, we're watching that key daily support and hourly oversold conditions for the bulls to try and find a bounce, knowing that a weekly higher low is very easily coming. So if I'm looking for long-term entries in the USMJ space, I personally want to enter on weekly consolidation while looking to maintain the uptrend. And there's a lot of clear setups where we have USMJ names that can pull back significantly and still hold uptrends on the weekly time frame, and the Canadian MJ names do not have that luxury. Like CGC, like Cron, APHA, ACB, TLRY, none of them have that luxury that we have on some of these USMJ names that have run so hard over the last month. KSHB, earnings approaching. So we broke support. We have the daily lower high and lower low. This was a weak bounce attempt. We closed at the low of the day, and that tells us daily trend change. Zoom out to get perspective. Weekly chart, equilibrium. So we've been watching this equilibrium for a while. This is now confidence that our lower high has been set at 628. And now we're looking for a higher low compared to 544 to stay in this weekly equilibrium. And earnings are probably going to dictate whether we do or not. So keep an eye out for a higher low compared to 544 and watch for this weekly equilibrium to tighten up potentially into May if all things go well. The tighter the better, because the break will be better with follow through when it does occur. I need to stop talking. Have a good day. Do good things. See you soon. So for Adventure Time now, got back from the road trip to Florida. Got a call from my buddy as I was looking for my next move, and he said, hey, I got a friend of a coworker, of a sister friend who needs someone to come house sit a couple dogs on the beach in Costa Rica in Pavones. And I said, okay, let's do that. So that was a great connection to have, and ended up going for 6 weeks to this house sitting spot, and it was perfection. And the change of pace that going to Costa Rica brought was just, it couldn't have been more perfect in terms of the lifestyle, just slower paced. Pretty much all you got to think about every day is, what do I want to eat today? And that's about it. When am I going to get in the ocean? What time is it? Where's the tide at? And Pavones has the second longest left to right breaking wave in the world. So it's a surfer's haven. And there's also a bunch of yoga retreats. So there's a bunch of yogis there. And the most important part is it's off the beaten path. It's all bumpy dirt roads and about a 6-hour bus ride if you want to get there from a city with an airport. So that keeps tourists away, and it keeps it really awesome and low key. Now, as we were leaving a few years ago, they were just building some kind of resort, something, and it felt like things were about to change. Hopefully that didn't happen, but I haven't gone back since then. So we'll talk about some stories and hanging out with the dogs. We'll talk with the dogs in a later video. But it was the kind of thing where we went for 2 weeks and stayed in a hostel to get a feel for the area and to meet people. We brought our jam instruments. And that was the best part about the hostel, is there were always people around. It was a big community kitchen. This beach is, 5-minute walk from anywhere that you stay in Pavones. And there are waves every single day. It just depends on the tide. Twice a day, there will be awesome waves. And I love body surfing. It's one of my favorite things to do. So having that available, I would just trade in the morning and then get into the ocean and walk the dogs. And that was the day. And that was the first time that I experienced a euphoria money growing on trees market. That was 2013, 2014. And the US penny stocks, they all ran 500 to 1,000% in the span of about 2 months, even less than that. So it was just massive euphoria, like we've seen with crypto, like we've seen with Canadian MJ. So again, these cycles just keep repeating themselves, but this was happening in the Canadian or in the penny stock MJ world. And we had a chat room where we just collected some like-minded individuals and chatted with each other and talked about plays. And that was really the first step towards the chart guys in terms of running a chat room and organizing things and staying productive and seeing what a team could really do working together. But being able to do that here was pretty much heaven on earth and just absolute perfection. was a little skate park that the locals had built. So this is the hostel, and it was just a jungle. The plant and animal species there are insane. Life is everywhere. And this place tucked away in the jungle, again, just late night jams with other travelers that were coming through. And I can remember one night it was just pouring, and this guy was freestyling, I was playing the drum, and my buddy was playing the keyboard, and it was just a good old time. There was a little kid who lived there. We brought these balls where you hit them. They light up in all different colors, and at night we would chuck balls at each other. Lizards were everywhere. There's Dan in a hammock. So we're going to go to the castle on the beach, which is I think what they called it, and the dogs, Baloo and Cowboy, for some more stories with them and some more Pavonas. Go to Pavonas. Go to Costa Rica. I got to go back. There's so many places to go, but when you get to a good one, you want to go back. But man, that was perfection. Internet wasn't bad. It would cut out at times, and it did lose me money one morning. I can remember the internet cut out and I wasn't able to sell. But it was the gap up open play. That's where I learned it. In that run, you buy into strength at the end of the day, you're going to gap up open the next day. And we didn't have pre-market trading in the penny stock world, so it was just this guarantee. And just lock it in, and ended up coming home with maybe twice as much money as I left with before I got there. So good times. See you tomorrow.